Good evening, everyone. So, welcome back to another webinar. We are doing one after a long time. So, there might be many more questions as well, but we'll try and answer all of these questions. But we'll focus primarily on a couple of strategies. Uh, let's go back to the basics. We do have gamma strategies, theta strategies, zeta, and delta. These are all different segments, and our strategies are, in different quadrants from positional to intraday, directional, and intraday non-directionals. Today, we are going to talk about some couple of theta strategies and another new segment, sigma strategies. So, in theta strategies, you guys have been using scalpers. And the scalper is something that we are converting into different set of strategies. We had theta strategies which basically are non-directional or have some semi-directional angle to it. Theta strategies are very scalable because of option selling, and basically these are straddles or strangles. They do complement our portfolio, directional portfolio with risk and high risk and strategies that we have. There is a negative correlation between them. We have discussed that quite a few times. So when we talk about all our strategies, and we had the basic strategies in TDS, TDD, TMS, and we had the scalper as a non-core strategy. What we have done is that we are converting these the scalpers into a hybrid strategy. I'm sorry, for some reason it seems that the update has not been saved on this, so I'm just going to remove some of these things. Apologies, I think the text was not saved, but I will speak about it. So when we talk about the dynamic Nifty and Theta BankNifty dynamic, both are essentially part of TDS and a mix of TDS and the expiry scalpers. So our expiry scalpers, and we have been very clear that we believe that scalpers should only be run for expiries, primarily a couple of reasons. One, the taxes are very low on expiries, and also the probability of theta decay is much higher. So when we are trying to do scalping for theta decay, we look into that probability that how many trades we will do and how many trades will be successful. So that's where we believe that expiries are probably the best times to do scalpers. So that's been our motto. But when we had those strategies, they were not being traded for rest of the days, and that has an impact on overall TradeTron ranking, as well as some people deploy the strategies and they expect the strategies to run, and they have some deployment associated with those strategies, and they are not performing. So they need the performance on days like Friday to Wednesday as well, when these two trade. What we have done is we have actually taken a strategy called TDS, which has been a long strategy associated with our portfolio, which is basically an always paired strategy. So what we have done is we have just divided these scalpers into two parts. One is the Friday to Wednesday part. Another is the Thursday. So Thursday remains the same as any scalper that you had been using from our end. But from Friday to Wednesday, it is a always paired strategy like TDS. It is separated for Nifty and BankNifty. So while TDS has a target of 2,000 rupees or 1,500 rupees basis the days, this one has half the target and half the SL. Between the strategies, and so Nifty has a target of 1,000 rupees from Friday to Wednesday. BankNifty has the same target from Friday to Wednesday. Both have a stop loss of 1250. While on Thursday, the scalper Nifty has a target of 450. The SL is 800. In BankNifty's case, the target is 600 and the SL is 1,000 rupees. So that's the basic description of these strategies. It is there on the strategy page as well, and we have enough literature to talk about it. Then we'll go to explain what these strategies are, but I'll start with TDS first. So TDS is the change that is happening, so it's important to talk about the change. So again, this is a graph updated for TDS. It has been a very old warhorse for us, despite all the volatility that we have seen. It has given a 62 to 38% ratio on positivity. It has an expectancy of 0.31. The maximum drawdown that it has gone is to 3%. On an average, the return is 4%. This includes some of the very difficult months in April, May, and June, where quite a few strategies struggled, and it was able to perform despite that. So that's the basic thing. When we see this number, it has gone, it has done quite well on certain days. The strategy used to have lots of trades, which we have reduced quite a bit by looking at certain parameters and reduction of those parameters. When we look into the Sharpe ratio, it is around 4.33. So this is one is a Sharpe ratio calculated on live, and another is a Sharpe ratio that you have from TT, which is calculated on paper trade. When we talk about TDS and TDB, currently whatever you see as a performance is mostly the scalper. So the TDN scalper, this is a performance that was there, and then we had the TDB scalper, which had been running since end of May and had been doing consistent performance, which has been updated to this strategy. So the current performance is only on the scalper for view. And this is a backtest with addition of the the TDS logic. Of course, there is some difference between backtest and live, but we have live data of TDS, which is showing that TDS is a very reliable strategy. And then we have got backtest to confirm the same thing. Specifically in case of Nifty, it seems to be doing very well. And I think even yesterday in the volatility, a lot of you would have seen that Nifty version worked very, very well. So that's a basic of these strategies. I think again it's because it's paired for most of the day. The drawdown is low, and even if you can see the actual drawdown on the scalper, it is around 1 to 2%. So it is quite low drawdown strategy as well with all the mixtures that we do. So this is the presentation on this part. We'll continue on the Sigma part, but I can take questions on the TDN and TDB part if anyone has any questions. You have to raise your hand and we'll unmute or allow you to speak. No questions? So I'll continue with the Sigma Nifty part, and then we'll take closing questions from anyone. So when we say, what the Sigma Nifty is, so it's a cash momentum strategy, which is a directional play. So again, in cash, we can only be long as such. We are trying to do swing in Nifty 50 stocks, which are in uptrend or bullish momentum. Average holding period is from 3 to 4 days. And, as you would have, some of you would have seen in the past, it's a very smart way of managing your cash swing portfolio. It requires POA enabled accounts so that the entry and exit can be automatic, something which is required because intraday strategies generally don't require this, or even FNO, we don't require a POA. but in cash, POA is required. In the past as well, Sigma series has been a very good indicator to catch the market trends and catch the trends before they have emerged. So in October and November, my own cash portfolio, was exited by these strategies, before the fall from all-time high. So it is very effective in that sense. We don't have any backtest for this. Unfortunately, TT would not be able to give a backtest, because what happens is that for the holding period that is there, 3 to 4 days average holding period, we're not able to capture the entire trend in the backtest, because the backtest will run for not more than 7 days in TT. But what we have is some data that is there, which you can all see. This has been the deployment from 5th of August. So it captured the trend beautifully, exited, yesterday, at nominal losses in most of the, positions that it had before the big fall happened. And that's what it does. It will basically predict the falls in the stock prices and trade accordingly. And they will it will take the position accordingly, exit the position accordingly. So that's something which it has done in the past as well, and it will continue doing this. We had this Sigma strategies as part of a portfolio long back, but since the market fell in October, November, I personally stopped using this thing. And I believe right now the market, again, even if it may correct, we'll see more uptrends coming in, and the stocks are looking much healthier, because even if the market is back to 18,000 or 17,600 for now, the stocks have corrected quite a bit. So there will be opportunities in the stocks, and this is where the strategy will work. That's it on the presentation side. Anyone has any questions on any of these things that we talked about? If you have questions, you have to raise your hands. Yes, Mr. Rao. Some issue, I think. I allowed you to speak. Yeah.
Mr. Rao, you'll have to press on unmute again.
Sorry, Ankur.
So you have to press on unmute again.
I think I should be. Now it's okay.
Yeah.
Right.
Yes, sir.
Yeah, when the market was down in the Sigma, what was the reason? Why did you exit, or why did you stop the strategy at that time?
So one is that because most of the stocks fell from the 200-day moving averages, and what was happening was so Sigma, when if it is we are allocating, let's say 10 lakhs to the on 1x, so it will take position in 20 stocks, and if it is not even taking position into 3 or 4 stocks, that means the strategy is basically giving us an indication that market is falling and market is not stabilizing. So even the older Sigma strategies were there in PT, and we could see that they are not taking positions.
Okay. In that case, does it mean that the Sigma would do well, or the signals will be available only when the market is in the upward trend?
Yes, mostly that's the intention of this strategy, because it's a cash strategy. Generally in cash, you cannot do shorts, right? So, and then it scans for signals in Nifty 50 stocks. So you might have, say, let's say there's a Adani stock in Nifty 50, which is in uptrend but rest of the stocks are in downtrend. So, it might only work in Adani, and that is not an efficient utilization of capital. So in those cases, this strategy will not work. So cash swing anyways, when we talk about Nifty 50 stocks, will not work when Nifty is in downtrend.
Okay. Okay. And the trading will happen only in this specific 22 stocks that are being indicated, or even
No,
if you add.
not in 22. Any of the 50 Nifty
Okay.
50 stocks, maximum positions will be into 20 stocks.
Okay. Fine. On the expiry, the other strategy that we discussed, what was the
Yeah.
need to combine both TDS and this expiry? Would TDS also continue separately, or both would be combined now to the strategy?
So idea is that TDS would continue separately for some time, and then as the time comes, we will decide if you want to stop TDS or not. The basic reason is very selfish in that sense. I would we will not mince words. We wanted the strategies, the expiry strategies, to reach many more people, and for that it means that the performance has to be displayed on the marketplace. uh, Unfortunately, the TT, how TT works is that if the strategy is not producing returns every day, it will never come into ranking, even if it is doing fantastically in the, as a strategy. So that's where the idea was, to make it trade every day so that it can come. Now, for people who want to do only expiry, they can still do expiry. They can still pause and unpause, for expiry and non-expiry. But at least what will happen is that the data will start generating, and
Right.
then it will come to more and more people. So the interest is to actually take the strategy to more and more people. I mean, Sigma, this Theta BankNifty Scalper, which was the earlier thing of this thing, has had 11 weeks of positive returns, and that's not small.
Okay. Yeah. Okay.
So just, yeah.
Sorry. Once you're finished with the webinar of all the others, and I want you to discuss few minutes on the TPS also.
Sure. Yes, Manishi, I'm allowing you to speak.
Hi, Vishal. Vishal, this is with
Hi,
respect to
Manishi, how are
Sigma.
you?
Yeah, I'm fine. Since it will be dealing in cash shares, so 1x denote how much capital and how are the number of shares decided? That was my question. Thanks, Vishal.
In Sigma?
Yes, in Sigma, how the number of shares that are bought in
Okay.
cash?
So Sigma is
That's how.
basically decided basis 50,000 as a base value on 1x. 50,000
Okay.
value of stock. So we are basically dividing equally between any Nifty 50 stock, maximum 20 stocks at a time.
Okay. Got it, Vishal.
And when you have also an option to start it from 0.2x, which is 10,000 per stock.
But TT allows that to configure
Yeah.
because
0.2 TT allows. In fact, the screenshot that you are seeing right now is 0.2. So it basically we allow it. I mean, it's something which is under our control. So we are allowing it from 0.2.
okay. So right now 1x is how much? I mean 50,000. That's what you said, right?
Yeah, one at 1x it is 50,000 rupees for a equity share, for one share, one, let's say, script, and then it will divide up as per the prices. So let's say Nestle is 20,000 rupees. So it will take 3 shares of Nestle.
Okay. So only rest 20,000 will be available for the rest of the eligible stock.
Yeah.
Okay. So that means to have exposure to more stocks, so it's better to have 2x or 3x.
So yeah, when you do towards 2x or 3x, still the stock limit will remain 20.
Okay. No, I was
Because
saying
at
this was
any given point of time, unless we are in a mega bull run or a mega bull day, generally you will not have all the stocks performing at the same time.
correct. No, I was saying in the context of Nestle because if you bring, if you bought 3 shares, then probably the capital, remaining capital will not be sufficient to buy rest of the shares.
Yeah,
Anyway, I
that is
got
one thing. That is one thing that could happen here, and that's the thing with cash, because you'll have excess capital at times. That will definitely be there.
So when do you plan to get this into marketplace, Vishal?
So it has been put in the marketplace already, but deployment wise, I have not deployed it as yet. I'm doing some changes of broker accounts, so I will be looking at deploying this from 1st of September.
Okay. So do inform in the group once you deploy.
Sure. Samit from our team is going to deploy definitely. He is already earmarked something for this. And yeah.
Okay. Fine. Thanks, Vishal.
Sure. Thanks, Manish. Pratik, you had a question?
Yeah. Vishal, like, how was the performance during this post-COVID recovery?
Pratik, I'm not able to hear you properly.
Hello, Vishal,
Yeah.
can you hear me? Hello? Yeah. Vishal, how was the performance earlier? You said that you deployed these earlier and post-COVID recovery time period. So how did it perform that time?
You're talking about
What was
Sigma?
the average returns? Yeah, Sigma. Yeah, I'm talking about Sigma.
So Sigma, on Tradetron, I deployed it. Sorry, I think, Pratik, can you mute yourself? Because you have to mute yourself. Yeah. So I'm just muting you right now. I'll unmute you once, I'm done with my reply. So Sigma, I had, I've been doing this manually for quite some time, but I had coded it into Tradetron in September. And September, October, I did about 8 to 10% on both the months, on Sigma as an entire portfolio. So I was doing Sigma on, stocks, niche stocks as well. I was doing Nifty 50 stocks as well, Nifty Next 50 as well. So the returns were quite good on that. But in October, when we exited, after that November, I had a minus 2%, minus 3% on that. And then, the strategy started taking very less trades, and then I stopped this strategy.
Okay, clear, Vishal.
So does that answer, Pratik?
Yeah, yes, Vishal, clear. Yeah, thank you.
Sure. Anyone else has got questions? Anyone else? Chetan. Yeah. Hi, Chetan.
Hi, so as you said that in one stock it buys around 50,000 rupees cash, right? But
Yeah.
if in case I go for 0.2x, then in that case the amount I equally divided into 10,000 for each stock, right?
Yeah.
So if in case it buys Nestle stock, it is around 17,000. So how is going to this happen?
So it will take
Because
only
each
one stock in that
stock is
case. So
divided
in
by
case of
10,000 rupees only.
So in case of Nestle, you can see Nestle
But
was
Nestle
a
is
stock.
around 17,000.
Yeah, 19,000. So it took only one share of Nestle.
Yes. So it will allocate the capital accordingly, right?
Yeah.
Okay. Okay, just not my question.
Anyone else has got questions? I think if we don't have any more questions, we can end this call. We'll take up any more questions if they are there on the group. Thanks a lot for joining in, everyone. Have a good weekend.
No, sorry, I had asked on the TPS, please.
Yeah. So you want to take it, in private chat, or you want to ask it here?
No, what I wanted is to understand how different is it from the TKZ.
So, Mr. Rao, basically what we are trying to do with TKZ and TK's, TPS is, there are times when normal non-directional will fail. And that is when, your directional indication comes in, right? So TKZ is basis ZIP. ZIP's directional, logic has been used to make it a straddle or a strangle or keep it naked. And because it is, of course, at a different time frame, the idea is that we will, have a diversification from zip as well, but with the similar logic. In case of TPS, it's similar to ZAP.
Okay.
So we are trying to go away from semi-directional, which is just based on premiums, but then something which is based, which has some relation to our directional strategy. So if someone wants to do only non-directional strategies or theta strategies and doesn't want to get into directional, instead of or let's say do only intraday strategies, they can do TKZ and TPS along with TDD and TADS, and so it will be a complete portfolio in that sense. Even yesterday, before some adjustments that TKZ made, TKZ was doing very, very well. And similarly, you would have seen the same thing in TPS. So on an extremely directional day, ideally TKZ and TPS would excel, while on a semi-directional day or a non-directional day, it will tend to perform slightly lower, or even if the decay is good, it will tend to perform well as well.
Right.
I hope that answers. But Mr. Rao, give us some time. We will also come up with some backtests on it, some information on TPS as well. Although it has been doing very well in paper trade and subsequent live deployment that we have done, we want to give it some more time and make sure that it is ready for all the market scenarios.
Okay. Thanks.
Thank you. Anyone else? I think some people joined late. We can't repeat, but any questions that you may have on our strategies, we can answer them. So I think we'll end this call here. Thanks a lot, guys, for joining in. Oh, Shiva is wanting to ask something. Okay. Hi, Shiva. You can unmute yourself and speak.
Am I audible now?
Yeah, Shiva, you're audible.
I want to ask, what is your recommended mix of setups, typically for a conservative trader, or rather, I would say, who's expecting around 1 to 2% a week, or rather 4% in a month, right? So, what would be your recommended mix of non-correlated setups?
So Shiva, that depends entirely upon your capital and risk appetite. The way to go about it is, if you have a capital like of 15 lakh rupees and you want to have a non-correlated strategies which have drawdown of 1 to 2%, then there's an all-rounder portfolio that we have created. You will see that. But if you say that I have a capital of 5 lakh rupees, then we have a different suggestion altogether, which is completely non-directional setup. It's fine. Some of the days it might fail. We will also try and do some non-correlated strategies in that. But the idea with a smaller portfolio or smaller capital is that we try and avoid whipsaws, which come with directional. So for directional, any directional one directional strategy can create havoc in a portfolio unless you have the right kind of allocation. So it all depends upon the capital. So if you have a specific question on that, we can answer and make a...
Yeah, assume it is 10 lakhs. I'm just making an assumption here. So if it is 10 lakhs, then what would you recommend? Or if you
just
want
give
to
me 1 minute. Yeah. So I'll just open, our Excel sheet, because we've designed some, portfolio on that side as well.
Sorry if this has been covered earlier and I'm repeating it.
No, it's not been. This specific question was not asked today. So I'll actually open this for you. Give me 1 minute. Yeah, so this is basically our strategy combos. And for 10 lakhs, there is an aggressive combo or there is a defensive combo. Basically, in defensive combo, you can do half of it. So 10 lakhs is something where you can do directional. And, you have something like a, 4 to 5% kind of a return on a gross basis on this, 20 lakh portfolio. If we reduce it, to 10 lakh, again, the ratio will remain the same. You can, instead of zip, you can do zip Nifty or zip BankNifty, and you can do 50% into it. This is like a 95% allocation to non-directional and 5% to directional. We can also do something like this, which is about, let's say, 25% directional and rest non-directional. About, 45%, 65, 70% direct and non-directional. So that's a bit riskier portfolio, but also the returns are much, much higher in this. So it's all a game of, what we can mix and match with. You can also do this, from our entire strategy basket, something like this as well, that, there's a 6.4 of TDS plus TMS, and then you can do TMS plus, ZipN. So you can do like both combined. This will be close to 10 lakhs, and you can have a return of 4 to 5%. Drawdown will be extremely low in this.
Okay.
You can see from the stats as well. Most of the days, we'll have positive, returns as well. So yeah, we can do a mix and match of, these strategies basis that on 10 lakhs.
Right. So is this Excel is accessible to everyone, or is it?
Yeah, it is accessible to everyone. Okay. I'll share the sheet, the link as well. You can download it. You can play with it, whatever you will not be able to play with the, live sheet, but you can download it and you can play with it and you can do whatever you want.
Okay. And it also has some trade details as well. Like I know that the
day-wise it doesn't have a trade detail. It has daily PNL, like of all the strategies. So you can see all the daily PNL of all the strategies. This is live PNL. You can see all this live PNL here.
Got it.
There are graphs associated with the portfolios that we are talking about. And then there is a dashboard. There is some net cost calculation sheet for you to see if, you want to go for a paid broker or you want to go for a normal broker. And then you have this certain things related to brokers, choosing of brokers as well. There's thing on the correlation as well. When we talked about TDD and TMS, right? So TDD or TDS on TMS. So when we see TDS and TMS, there's a 57% correlation. But when we see TMS and ZIP, there is a negative correlation of 31%. So that basically helps. So basically on the day, ZIP will make money, TMS will not make money.
Got it.
And it will be vice versa. So overall in the portfolio, we'll have lower drawdowns and higher returns.
And
less whipsaws.
Yeah, and I have one more question. As in, all these are VIX independent setups, like, or is there any recommendation based on certain?
Yeah, these are all independent setups. There is nothing, common between the setups except, the major behavior. So when we talk about, TDS and TMS, this is always paired. TDS goes semi-directional on Thursday, similar to what TDD does. TDD is always, semi-directional. TKZ is also semi-directional, but it is much more aggressive. And you can see the correlation between TKZ and TDD and TMS is very, very low, which basically shows you that it will make money on days when TMS and TDD might not also make money.
Okay.
So that's how the strategy is.
My question was more on the VIX. So if the VIX is lower, is there a tendency for some setups not to perform, or is there a specific recommendation not to take when the VIX is lower or something like that? Or this is all, irrespective of the VIX levels, this performance is expected to
I would put up this way, it's irrespective of the VIX performance. I'll just give you an example. And I was trying to take an analogy of this today to some people. Now, this is like a daily return that you see on number of days, right? Now, we would say, okay, there is a strategy which is, let's say, TKZ. or TDD or TDS, average return on a Thursday. This is the average return of these strategies on Thursdays. But on other days, the return is less. So should we stop the strategy on this day? It's very difficult to do that. I'll give you a reason why. So yesterday was a very, very bad day for non-directionals, right? Someone would say, I would do looking at the data, they will say TKZ does very, very well on TMS does very, very well on Friday. I'll only deploy TMS, right, or TDD. But it doesn't. I mean, TDD had maximum SL yesterday. So you can't, choose a strategy just basis that. You'll have to run it for the entire week, because what happens is a premium is consumed during the entire week. So one day it will be good, one day it might be bad, one day it might not be good, one day it might be good. If you see something like a strategy like GMP, it has made a lot of money on Mondays, but it has made a lot of money on Mondays at the start. Now it has not. Now these days, it is making more money on Thursdays. So we can't predict any of these things, like how it will perform on a certain day, what will happen on a VIX environment. What happens is, if there is a low VIX, then definitely the decay will be higher. Low VIX means low uncertainty in the market, and market is more sure about the direction that it will go, or the non-directional nature of the market. So in that case, mostly non-directional strategies work very, very well. But in case of rising VIX, they don't work because the premiums are rising. And in that case, directional strategies work. So the answer to that is very simple. We try and make a portfolio of non-correlated strategies. Everything else will be taken care of. Because in the data that you see, there's been from October to this month, there have been many different situations that have come in for each and every strategy. Some strategies started in April, some started in March. So everything has been seen by these strategies, and rising VIX period, low VIX period, and they have performed as collectively on that. In fact, none of the strategies that are there in our core portfolio have got a negative return for any month. So they work.
Got it. Thank you. Thanks very much.
Anyone else has got questions? Okay, I think if we don't have any questions, we will end this call. Any other questions that are there, we will take them, privately or on the group. Thanks a lot, guys, for joining in. Sorry for the people who have joined in just now that we are ending, but if you have any questions, we'll take them. Thank you.
Thank you.